What if I told you there's an ETF designed to keep your income steady, even when the market is crashing? Meet JEPQ, the JPMorgan Nasdaq Equity Premium Income ETF, a rising star among high-yield funds and potentially your best friend in a bear market. Let's break down why. In volatile markets, investors often scramble for cover, rotating into bonds, gold, or cash. But what if you could stay in equities and still collect consistent income? That's where JEPQ shines. This ETF takes a unique approach by blending tech-focused growth stocks with a systematic options overlay strategy. In plain English, it owns big names in the Nasdaq, think Apple, Microsoft, and Nvidia, and then writes covered calls on the Nasdaq 100 index. The result? A consistent income stream paid out monthly. JEPQ's current yield hovers between 11 and 12%, depending on market conditions. That's significantly higher than most dividend ETFs or bonds right now. And unlike many high-yield strategies, JEPQ doesn't chase junk stocks. It targets quality. Now here's the real magic for bear markets. Covered call strategies naturally thrive in sideways or downtrending markets. While growth stocks lose steam, call premiums stay high due to volatility. JEPQ captures that premium and distributes it to investors, turning market fear into monthly income. During drawdowns, JEPQ tends to lose less than traditional growth ETFs, thanks to the buffer provided by options income. While you won't get all the upside in bull runs, you'll likely sleep better at night when things get ugly. And if you're wondering about fees, JEPQ's expense ratio is 0.35%. Not the cheapest, but reasonable considering the active options management it includes. Let's talk holdings. JEPQ isn't just Nasdaq 100 in a wrapper. It's actively managed, with the portfolio team selecting stocks based on quality, value, and momentum factors. That means you're not blindly buying the most expensive tech names. You're getting a curated slice of innovative companies that still meet income goals. Here's a look at its top sectors: information technology, communication services, consumer discretionary, and a touch of healthcare, monthly income, Nasdaq exposure, and downside protection. That's the JEPQ promise. This ETF is ideal for income-focused investors, retirees needing predictable cash flow, investors who want Nasdaq growth, but with a volatility shield, and anyone building a barbell portfolio with growth and income. Of course, no investment is perfect. JEPQ's trade-off is capped upside. When the market rallies hard, you might lag behind QQQ or VTI. But if you're tired of roller coasters and prefer consistency, this ETF deserves a closer look. Bottom line, JEPQ is one of the smartest ways to get paid while staying defensive in today's uncertain markets. If you found this breakdown helpful, hit like and subscribe, and let us know in the comments if JEPQ is part of your portfolio.